We are half an hour away from the opening bell, last session of the week. Happy Friday, by the way, here in Hong Kong, in Shenzhen, and in Shanghai. You're watching The China Show. I'm David Ingles with Yvonne.
Our top story this morning, Asian stocks slip as strong U.S. business data spurs bets on a Fed hold until December now. Nvidia, a rare splash of green on Wall Street, while the SEC opens the door for spot Ether ETFs.
Now, Bloomberg learns that Simon Sadler's Segantii hedge fund is shutting down and returning capital to investors after an insider trading charge here in the city.
And fresh protests expected in Taiwan as the opposition pushes a bill that critics say will limit President Lai Ching-te's ability to govern. All right, we're wrapping up this trading week a little bit on the back foot here when it comes to Asian risk assets. We're slightly down when it comes to Asia, China or the like here. In particular, we're down about 0.6%. But certainly we're seeing global stocks set to snap out of 4 weeks of gains, and stellar gains at that. You know, borrowing from Nvidia, we saw that pop in shares after those earnings. You know, most benchmarks were actually lower. And of course, we're getting closer to that U.S. Memorial Day weekend. So Monday markets will be shut. So volumes alike certainly is one thing in focus. And we're certainly seeing those inflation concerns wobble once again after what we saw from those PMI data out of the U.S. So once again, we're seeing that sell-off across treasuries. And you're starting to see yields pick up, but stabilize a little bit in the Asia session, though. But we're still hovering at 491 when it comes to your 2-year. That's around levels that we've seen the highest in about 2 or 3 weeks. 10-year yield as well. We haven't seen those twos and tens inverted since, well, the most since I think April or so. So certainly that is the ongoing talk now, and you're starting to see what these swaps are pricing in and continuing to push back the possibility of these rate cuts. We went from November yesterday maybe as the first rate cut to now December as well. So you're seeing that across maybe some of these sovereign bond markets. Australia 10-year yields up some 4 basis points. We're watching that 10-year JGB yield at 1%. So inflation in Japan cooling for a second month, but we're still above target for a 25th month, I believe. So does that change at all what the BOJ can do this week? You know, or whether does it change at least the speculation that they're going to have to hike later on this year as well? Most people say maybe not right now. Oil's around those 3-month lows right now. We're hovering around 81 bucks when it comes to Brent, and we're still seeing dollar yen. We just approached that 157 level, so maybe we could be closer to that intervention watch as well for Japan. And we're continuing to watch this dollar story, what this means for EM FX, particularly in this region. We continue to see weakness across the board when it comes to the Korean won, the Taiwan dollar, as well as the Malaysian ringgit here in the early part of the session. We're also watching these Taiwan stocks, though. I mean, these military drills that China has undergone, the most in, you know, the biggest in a year, not really deterring at least the equity side of things. That market is still looking pretty hot with that AI theme. Keeping on the theme of tech, though, take a look at what's been going on in the Golden Dragon overnight. We saw quite a bit of a steep drop there, about 4%. Alibaba took a bit of a leg lower there. That really dragged things down. So we'll see how this all plays out in the Hong Kong session, because it looks like, Dave, we are set to snap out of this outperformance in China when it comes to the MSCI China benchmark over its global peers for the first time in about 8 weeks or so. So certainly, are we likely to see things, I don't know, revive, or is this the start of something of a turn? We're seeing futures are on the back foot here this morning, 725, close to 726 levels here. That fix, very much important today, Dave.
Yeah, I mean, the lack of catalysts, just looking ahead, right? So, I mean, we're done with earnings season in Greater China, for example. I mean, who knows what we will get, or we could possibly get as far as sort of regulatory policy announcements or pronouncements are concerned there. But yeah, certainly to your point there, it's been 8 weeks of bliss. Really for MSCI China. Well, most of the benchmarks in Greater China have really outperformed. All that being said, so on a daily basis, we are, I think, down for 3 straight days. We could get day number 4. We are likely to get day number 4, looking at how futures are trading today. More on, and Yvonne touched on the dollar strength story just a couple of seconds ago, more on this yuan fixing that should be fairly eventful today. Looking at where the currency is trading, we have a 10-year bonds. I think those are regular bonds. The special purpose bonds, I think that the 20-year bond sale as well. In terms of data, you have GDP numbers coming out of Macau, and we are still in the window for FDI numbers to come through as well. And apart from all of that, yes, we're looking at to what extent we will see, of course, this momentum start to come off this equity and also the bond market, just seeing how far yields have picked up as well. Just the lack, Yvonne, I guess, in terms of to the macro picture, how far we have now pushed back these expectations of rate reductions from major central banks.
Yeah, because, we still don't know what's really going to happen with the Fed here as well. And that certainly is why we're seeing this kind of U.S. outperformance story come back to the fore once again. What does that mean for the world of EM? Let's bring in Sean Taylor, CIO and Portfolio Manager at Matthews Asia. He joins us here in the Hong Kong studios. We talk about the strong PMIs. We talk about these hawkish comments from these Fed minutes this week, and it really changes the narrative once again of inflation concerns coming back. What does that mean when it comes to emerging markets in this part of the world?
It's good for Asia, actually, relative to LATAM, and it's good for the cyclical side of Asia, because one reason that's driving these changes in interest rate policy or potential interest rate policy is growth. And we are seeing synchronized world growth, and that's good for risk assets. But one has to be selective on countries. So, ASEAN's not looking so good in that. And, LATAM, which did very well at the end of last year when rate expectations came down, is really beginning to underperform. And the margin of, the extra marginal dollar is going into North Asia.
Would that be a function, and I know there's perhaps more nuance to hit here, but is it more a growth story now in the equity market than it is a value play, given all the themes at play?
I think relative to global equities, Asia is cheap. It's less cheap than it was at the beginning of the year.
Well, we've done very well.
We've done well. I mean, if we'd said at the beginning of the year, 10 to 12% is sort of average return we were expecting, 15% would be a really good year, we're already there at the average, so maybe we pull back and consolidate. But the drivers seem to be there, and they seem to be getting broader.
We don't need Fed cuts then to really keep this rally going.
I think there's a lot of central banks in Asia that would like the Fed to cut because they're finding interest rate policy quite tight, but not in North Asia, not in the bigger markets.
Okay.
Well, what themes stand out to you? So we have different pillars of outperformance we're seeing in the region, for example.
AI.
There's AI. Is there an earnings outperformance still also to talk about here? Yeah, so what themes are you latching on to at this point?
Our sort of medium-term theme, which I think is working out quite well, is that Asia is basically recovering post-COVID. 2 years behind the US. And that's coming into GDP numbers, but really coming into earnings. And we're beginning to see them change. If you look at earnings revisions globally, US has been very strong, but it's mainly been in the top 7. That's widening out. Europe is beginning to see earnings pick up. Japan has had quite good earnings the last couple of years. Hasn't been in Asia. It is this year. But it's very selective. It's mainly in technology, in Taiwan, and some of the cyclical side of Asia. We would expect with some of the, the better data coming out of the rest of Asia that will sort of pick up over the year.
Okay. You mentioned China, that it's hard to stay underweight this market now. I mean, given the rally we've seen the last few weeks or so. What do you do after a 20-30% rally now in China?
I think you have to be patient and be very selective. I mean, there are definitely differences in the company's earnings. So, take a little bit of capital out of those that have gone up because of risk premium changing, but the earnings aren't delivering, and focus on the companies that are delivering earnings.
Talk to us about sectors then, because so we're about a month to end the second quarter. So if you have been long China, you've delivered, it's given you alpha, for example. You want to protect that. For the second quarter, what exposure do you keep, and for those that you don't keep, where do you take that?
We still keep a structural overweight in tourism, particularly domestic tourism, because that's continuing to go.
Right.
We are seeing selective internets doing a lot better, and also they're buying back stock. The capital management side of that is very powerful. Better dividends, better buybacks, because it's very low relative to history. And actually, we're still keeping exposure to property. And if it pulls back over the next couple of weeks, we would add to that, because I think property is an area where you've still got a lot of upside, and the stocks are quite cheap.
Right. Wait. So you've actually bought into this property story, like actual
participated in this, right?
Yeah, the actual developers themselves.
Yes, I mean, we've gone through the estate agents and some of the developers and the SOEs and a little bit of POE, but just quite selective. But I do think what changed on Friday could be quite good news. I mean, the market will wait for evidence, so it might take a few months, but it is another area that hasn't performed in China for the last 4 years, and it doesn't take much delta for it to really pick up.
People say that the place that's maybe the safest amidst this sort of higher for longer scenario is Hong Kong, because you have this dollar peg, you're shielded by the currency risk and, of course, the volatility there. Is Hong Kong still the safer place over the domestic market?
I think in Hong Kong listed stocks, yes. In Hong Kong domestic stocks, probably not, because I think, if you look at some of the malls, some of the companies, I mean, the retail spend's going across the border. It's clearly in the Greater Bay Area. It's not really in Hong Kong. And I think you can see that in F&B as well. So I would have thought the delta was more in mainland China, but listed in Hong Kong, so MSCI China as opposed to the A share, because A share earnings are really not picking up. They're probably going to be the last to pick up.
Right. What about Chinese banks? You have a juicy dividend there that this group is actually offering you, and I'm surprised not a lot of people are picking up on that.
Well, I think it's a theme from mainland investors, from the onshore investors. They're definitely trying to buy, the cheaper Chinese banks in Hong Kong with a decent yield, and you can see that all the time. And actually, maybe they sold a bit in the rally, but when they have to be invested, and that's not a bad idea. I think the trouble is most international investors don't like buying state-owned banks. And also with the property changes, they want to know, well, how much the bank's going to have to do national service. So it is a worry. But I think it's overly worried. The defensive characteristics of Chinese banks are not to be ignored when markets are volatile.
Okay, we have more, of course, coming up there with Shanti. We barely scratched the surface. More, of course, in the big market things out of Matthews Asia in a moment here. Of course, in about 4 minutes from now, we'll be getting the midpoint of the day, the yuan midpoint. So Thursday, actually, just to remind our viewers, was actually set at the weakest since January. The PBOC, of course, appearing to be allowing the currency to adjust further to the strong dollar story. There you go. Visually, that's the yuan fix. Year to date, and since yesterday, since that point in time, the dollar's actually strengthened even further. So I would be, I guess, in some ways, semi-bracing for some news in a couple of minutes from now.
Yeah, whether we actually see something a little bit higher than yesterday, that's certainly going to be quite interesting and telling of how willing the PBOC is in loosening their grip on the currency here. Still ahead, Bloomberg has learned that Segantii Capital is shutting down and returning capital to investors after an insider trading charge sparks concern about a flood of redemptions. We have the details coming up next, and we're also counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show. Happy Friday.
Right, welcome back. So we're just waiting on the daily midpoint of the day to come out of the PBOC. Should be out at any point now. So we're looking at, well, let me just give you the survey range for now, 711.15 up all the way up to 725.75. We are expecting this, though, to come in, if not below the lowest end. Okay, it is coming in, and it is below the lowest end, but it is above the 711 handle there against the U.S. dollar. So it's the first time, I believe, all the way since early of the year that we've actually seen a midpoint with that print, and which really continues the theme we were following yesterday, the PBOC needing to adjust to this strong dollar reality.
Yep, and they are, and you're starting to see the movement in dollar China, or a little bit of a spike up here. So continued weakness across the EM complex here with 726 handle now for your offshore rate. So certainly, how are they, how much willingness do they have, or tolerance do they have to weaken it any further from here? But when you have a dollar yen at 157, somehow, that's really one thing to blame as well. It's not just a dollar story.
Yeah, these key crosses are going to be in focus right now, really on the back of, which one is cheaper than the rest. And certainly the dollar is the underpinning there. And you were just mentioning these earlier, the Thai baht coming online right now, also coming in weaker yet again for a second straight day. Anyway, I think we digress. But the dollar story is certainly a key part to this because of this Nvidia story that just...
Well, yeah, I mean, that was the one sort of good news yesterday, really, after the Wall Street reopened and the earnings and this 9% pop in the shares and the like. So certainly, this AI theme isn't really being overshadowed by the Fed and inflation higher for longer concerns, but the Nvidia stock continues to be a standout story. Let's bring back Sean Taylor, CIO and portfolio manager at Matthews Asia. So obviously that's still an AI theme that has reinvigorated once again. When you look at this part of the world, though, what are some of the key beneficiaries of this whole AI boom, you think?
I think the markets here started off looking at AI as a sort of speculative trade, and you saw a lot of small and mid caps go up without really any earnings. which is quite often happens in Asia. But I think now with the Nvidia results quarter by quarter, what we can look at is the total addressable area, the market in Asia is increasing. And that means the demand that Nvidia and other companies will have for the chips, is really beneficial for Taiwan and also Korea, and also for the hardware. Then you have to think, well, when AI moves from the computer to the humanoid to the phone, who's going to benefit? And actually the supply chain in particularly Taiwan is a major beneficiary. So you've got to be very selective on stocks, but it's a real driver. And at the same time, as we were talking earlier, we've got this cyclical driver that DRAM, NAND are looking better. So you've got a sort of structural story plus a cyclical story, which makes it very interesting.
The old tech, which is quite funny, as we put the DRAM story, the new tech, which is AI. Well, let me add another layer to the Korea story, but you also have this value up program. There doesn't seem to be, well, there is probably a risk, but there doesn't seem to be a strong case not to be in Korea at the moment.
No, I mean, Korea has actually underperformed this year, but it's mainly to do with one of the largest stocks. But, the value up trade, I think, is very interesting. And, it's not going to be as enforced by the government and the regulations as it is in Japan. It might be over time. It had a little blip with the election result, but actually, when you look at the banks and the autos, they're still incredibly cheap, and they've still gone up about 40 or 50% this year. So I do think that, yet again, selectivity is important. The chaebols, it's probably going to be harder to look at some of the holding company structure until the law changes on inheritance tax and other tax issues. But there is great value there, and it's uncorrelated. That's why we like it. It's not correlated to China growth or China risk premium, to what happens in the Fed, or to the cyclical side of markets.
You still think, though, Japan offers the best upside in the region. Why? And how do I deal with this yen right now that continues to weaken?
So I'm actually quite not that constructive on the yen, range bound at best, and I think the central bank pressure will be to keep supporting the yen, because I think the yen, there's no real reason for the yen to go up in its own right. It will only be a US dollar move. So that's pretty positive for markets. Look, a massive fall in the yen would not be positive, because people then get worried and they don't like intervention. But the yen is leading to more money going into Japan, more sort of tourism, more business, it's more competitive, and the earnings are coming through. And that's important. In Asia, we're saying some earnings are coming through. We hope others are. But in Japan, the earnings are coming through, and international investors are still very underweight. And I think at some stage, they're going to look and say, we've got to take more money out of the US. And they're not quite keen, they're not quite convinced on China yet. They're not quite convinced that they should go into India at this level of valuation. So I think North Asia's the area, and Japan's probably the best, got the best argument for that.
So you're not seeing that sort of the conditions being met for that rotation out of Japan, out of North Asia to China as of yet?
You saw that. I mean, if you take a 6-week period, we had India up about 3%, Japan up about 1 or 2%. And we had China up 20%. So yes, for short periods of time. But I think people still go, I think a lot of us see China as a tactical story, where you've got this sort of cyclical pickup, and maybe over the next 3 months you might have, more policy that changes that. But we need earnings to make it a structural story. Where, India and Japan are structural stories, so people just rotate out and then they come back.
Anything to avoid in the region?
And I still be cautious on ASEAN with the rate situation. And we're actually quite overweight Vietnam, but the rest of ASEAN really needs rates to come down, and we don't believe that's going to happen.
Sean, fantastic. Nice to speak with you. Have a great weekend ahead.
Thank you very much.
It's looking rainy out there, but lots of indoor activities.
Same thing every week.
Yes. Hasn't changed.
Every day, really, this week.
I think it's correlated with this equity market rally in Hong Kong. 8 straight weeks now. We'll see. Sean Taylor over there, by the way, CIO, PM at Matthews Asia. Going into the open today, 8 minutes away. Futures are pointing down 0.7%. So it's looking like a 4th day of declines here in Hong Kong. This is the China Show. Good morning. Welcome back, and good morning, good Friday morning, in case you're just joining us right now. One big story that we're tracking here in Hong Kong is certainly these developments with hedge fund Segantii. Well, the company is said to be shutting down and returning capital to its investors here as, well, the hedge fund faces an insider trading investigation. Sources have told us that, the Hong Kong-based hedge fund is potentially facing significant redemption requests, which should be unsurprising given the news flow, and that it will unwind down in a measured fashion. Now, the fund said separately that it is suspending redemptions at this point in time. Yeah, so a lot of details to this story, of course, and certainly what a quick turn of events here for the company.
It's an abrupt end, but certainly it looks like what we're seeing in the courts might be something that we have to continue to watch, right? It's not over just yet. We haven't heard much in terms of what this means for compensation and jobs. You talked about the 140 people that might be involved and affected by this shutdown, but certainly there is a lot of questions now about what the legal process is going to be, because basically this case has been moved to the High Court, which does imply, according to our sources, that we could be dealing with some longer sentences here.
Okay, we'll keep on top of this story and we'll revisit it later on in the show. Just going into the markets right now, 4 minutes of the opening bell, it's a weakness coming through. Not just in Greater China, this is really a story, and not just in Asia. Globally, we've seen, apart from, I guess, a pocket of green in Nvidia and friends, just this downdraft across global equity markets, and global bonds have actually done also quite poorly these last 24 hours or so, really on the back of data really in the U.S. that suggests that rates are not going to come down anytime soon.
Yep, and we're watching in terms of some analyst actions here today. Obviously, when it comes to the shipping space and Costco shipping, this is according to HSBC. They've cut Costco Energy and the shipping side of the business to hold there, and IRI, that's cut to neutral at Goldman with a price target of 15 renminbi. In terms of stocks to watch, it's really, we're continuing to watch the China tech space after what we've been seeing. Alibaba, we have a scoop about a convertible bond that they're offering as well. So they've been pricing that's come through here. So we'll see how that plays out when it comes to the stock here this morning. We're still seeing some downside. Lenovo down some 2% after those earnings as well. We got plenty more. The open is next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets here. We're ending this week on sort of the back foot when it comes to this equity rally that's been really going on globally for 4 weeks now. We are set to really snap out of it, and especially here in Hong Kong, where basically we are poised to, of course, end that long outperformance on MSCI China. 8 weeks of gains over its global peers may have to come to an end this week, Dave.
Unless we get, I think, what should be about a 3.5% rally today.
Okay.
Which we're probably not going to get. Given the weather out there, and just lack of catalyst. Unless, of course, we get some big announcement. Of course, it is Friday, and typically you do get, of course, some of the, and you know, this time last week was when we got that announcement on property. Not to say that something's coming, but certainly my point really being here, there's nothing that you can see over the agenda these next few hours or so that might indicate that some big catalyst is coming. On that note, there we go, 0.3% MSCI, CSI 300 rather. Small caps and some of the large caps, of course. In terms of bond auctions today, oh, by the way, yes, this is a good story too. Thank you for reminding me. So Xinhua's actually reported yesterday that President Xi Jinping outlining, which could be, I guess in many ways, a preview of what the third plenum might look like in terms of priorities here. Breakthroughs on housing and employment, which is why we're looking at some of those sectors today, and we'll literally see what's moving on the back of that. In that last 10 seconds as I was going through that, as you can see, things have turned more red here on your screens. In terms of a bond sale today, I think we have two. Certainly worth noting would be the 20-year bond sale, special purpose bonds. That's today as well. So when you look at where you are as far as yields are concerned here, 2.3%. Okay. Flip the boards. Thank you so much. There we go. 40 billion yuan in 2044 bonds. In Hong Kong, the open is this, 18.7 right now. 8 shares are doing that. Alibaba, slightly to the upside. You had a big drop overnight. The big story there was convertible bonds that they then came out and confirmed. And then we now have pricing on those bonds as well. AIA, Meituan, and China Construction Bank, nothing much to tell you about. A weaker fix again from the PBOC. First one north of 711. fairly convenient, if you got that pun. There we go. All the way back to January of this year, certainly with the dollar moving up, it's adjusting to that new reality. Apart from this, there's really not much catalyst, Yvonne, right? So we have to look ahead to next week. PMIs, I believe. There's the Shangri-La dialogues coming up, industrial profits. But as of this week, we're pretty much done with earnings season. So I think while that perhaps is the case, and while that this absence of new catalyst and information, we'll probably see these markets consolidate even further.
All right, we'll continue to watch this one. We still, wrapping up that earnings season, as you mentioned, and Xiaomi was certainly one of the last to report. But really some interesting sort of new targets, really aiming to deliver 120,000 of its SU7 electric vehicles this year and hiking its initial targets for a car it hopes can eventually compete with Tesla. For more on the company's latest earnings and forecast, let's bring in our Asia transport reporter, Daniel Lee. Yeah, it's a tech company, but we brought him in to talk about this EV. 120,000. Obviously, that's not a confidence from the company, but is this a pretty ambitious target, you think?
Yeah, I mean, it shows healthy demand, really, for its new first foray into the electric vehicle industry, this SU7 sedan, in fact. And so, yeah, going from a bump from initially 100,000, and which, again, not that long ago launched, this is a good sign for them that they are building on momentum. And again, when they have gone from making just smartphones, and which they still are, to making also electric cars, the fact that they can get to that level of 100,000, as we have spoken on this show so many times, to get to a level of 100,000, and where many other Chinese EV upstarts have really struggled over a multi-year period. So it's a good sign for them, especially as they try to take on Tesla in the long run, and it has big ambitions in this space.
What's special about it?
It's a cool-looking car.
Okay.
It's a cool-looking car.
All of them are cool-looking. Well,
yeah.
You make a very good point, right? They're coming in a very competitive car market. And, I think they're one of the very few that have raised guidance on what they think they'll be able to deliver.
Yeah, I mean, still we're talking about very small numbers in an ultra-competitive space. Again, they're priced competitively. And even when you look at its earnings, overall, this is still not necessarily feeding in a big way into the overall picture. Whilst revenue growth is at its fastest in 2 years, that net income line did still drop year on year. So it's still baby steps, but the fact that there's this pipeline in future with an SUV coming into play that's going to rival Tesla's Model Y, and so there is encouraging kind of signs from them that they feel more confident to raise that delivery guidance, and potentially what that means for production as well, being a little bit higher going forward.
Okay, Daniel Lee, thank you so much. Our Asia transport reporter, as we were talking there. There we go, Xiaomi down now 3% in the opening minutes here. Just really, I guess in many ways, just underscoring the point we were making earlier. Post-earnings, there's people are taking money off the table. And certainly when you take a bigger step back, the earnings season, let's get the key takeaways. Charlotte Yang, our Asia equities reporter, is here with us, of course, to just take us through, now that we're done or not completely done, you guys have done some work on this. What have we seen?
Yeah, so far for this earnings season, we're seeing that there's actually growing optimism that China earnings are showing signs of bottoming out. So analysis done by Bloomberg Intelligence shows that about 40% of MSCI China Index members that have reported, they have delivered better than expected earnings. And to give you a little bit of context, for the last full season, that's about like 39% of the index members that have beat. I mean, it's a small improvement, but it's the second straight quarter that shows an improving earnings per share. And if we look at specifically by sector, the communication services, discretionaries, as well as industries are the ones that deliver the most positive surprises. And I think the China Tech earnings results with Tencent, for example, would also be boosting sentiment, helping people to relook at the valuations side of things. But with that said, I think a big missing element for this for broader recovery is property. So the property sector, as well as materials, continuing to be are the sectors that deliver the most negative surprises. And all real estate stock on the MSCI China Index have missed the estimates this season. So I think property sector recovery is continuing to be the focus. Everybody's will watch going forward.
So we're at a bit of an inflection point on earnings. What else are going to be some catalysts then to keep this rally going?
I think A big, part of the optimism earlier was because, Beijing's policy, more pro-growth signals, whether that's with, reducing property inventory or, the issuance of ultra long sovereign funds. I think for property is like how the local governments actually follow up with that will be the key, one of the catalysts, investors use to assess whether this policy will translate into improving consumer confidence as well as bottom line for these companies.
All right, Charlotte. Thank you, Charlotte Yang there. On what's next when it comes to this, what has been a world-beating rally that has hit a bit of a consolidation, as Dave had mentioned here. Let's get to another big story that's happening here in Hong Kong. So the U.S. SEC has approved a proposal for the first U.S. ETFs investing directly in the Ether token and putting the crypto industry on the cusp of a major landmark. But here in Hong Kong is now said to be considering allowing staking for exchange-traded funds investing directly in Ether. Our markets reporter, Annabelle Jewelers, is on top of the story with this big scoop. Tell us more.
Well, okay, what is staking?
Where do we want to start? Okay, let's start with staking.
Explain that for us first.
Okay, I think we can start here. Okay, I'm not going to get into all the details, but we can just sort of start at a high level what staking exactly is. So what you need to know is that Ethereum, it's what's called a proof-of-stake blockchain. So in the Bitcoin world, you have something, a Bitcoin miner, and many people are familiar with that. They validate those transactions on the blockchain. In the Ethereum space, these sorts of things are called validators. So essentially, what you do is you're a validator, you lock up or you stake some of your tokens on the blockchain, and then when you're validating transactions, it proves that you've got skin in the game. You want to do everything right because you want to ensure that this is a legitimate blockchain as well. So that's the validation process. That's why it's proof of stake. You've staked your tokens on the blockchain. Of course, you want a reward for that, and that comes through in the form of tokens that are given to you. It's a sort of yield. It's around 3 to 4%, and that's paid out in the form of more coins. So that's staking at the high level, and that's what's the really big question here is staking. Would you allow it for the Hong Kong ETFs, the spot Ether ETFs? Would you allow those funds to be staked?
Yep.
Versus what's happening in the US, and it's a very divergent path we're on right now.
And so far, our understanding is that is the key difference between where we perhaps find ourselves in Hong Kong than what we did see in the US.
Yeah, well, it really comes down to how the different regulators are perceiving Ethereum or Ether, the token. Is this something that's a security or is it not a security? So in the US, because you have that yield and that's the form of a reward, they're a little bit more cautious on how they want to approach it. Whereas in Hong Kong, they already see it as a security. It's been that big commodity security sort of debate in the US. Here in Hong Kong, they're seeing it as a security. They're okay with pushing ahead and allowing staking to happen for these ETFs. The big question, of course, is for anyone that's looking to invest their funds into an Ether ETF, why would you choose to do it if you can get staking rewards elsewhere? If you're investing directly into Ether on a crypto exchange, why wouldn't you continue to do that? Because you can get that yield that you're not going to be able to get if you're in the ETF.
There you go. Belle, thank you so much. Annabelle Jewelers then. Of course, you can catch Belle's story on your Bloomberg and also on the website, and also get an insider's guide, broadly speaking, here to the money and people shaking up the finance hub here in Hong Kong, our Hong Kong edition newsletter that's out every Thursday, so that should, well, the new version should be out of the oven already at this point in time. Check that out. Also, if you're on the internet, at that address below. There we go. Plenty more ahead. This is Bloomberg.
Here's a look at some of the big corporate stories we're tracking for you today. Alibaba is raising $4.5 billion from a convertible bond sale in one of the largest such offerings in recent years. Sources say the company priced its 7-year notes due on 2031 with a coupon of 0.5%. The offering is expected to close on May 29th. Alibaba plans to use the proceeds for stock buybacks. Alibaba also says it's planning to launch its first cloud services region in Mexico. It's looking to establish at least 6 data centers in key markets, including Malaysia, Thailand, Philippines, South Korea, in the next 3 years. Alibaba's AI development platform Model Studio will soon be available in Singapore. Ferrari says European car makers need to be more competitive amid the emergence of Chinese EVs. The CEO, Benedetto Vigna, told Bloomberg that Chinese EVs are nice competition for his industry. His comments come with Brussels set to announce the results of an investigation into Chinese EV subsidies.
For me, this is a call to action for Europe. is a call to action to become more, how can I say, pushy, less complacent.
And Boeing shares slipped after it scrapped a plan to generate cash again this year and warned of another significant outflow in the current quarter. Boeing says cash burn will be similar or worse than the prior period when it ran through almost $4 billion. Boeing's delivery woes have been compounded by China's request for additional certification on some aircraft parts.
The CAAC has asked for additional validation on a lithium battery in that recorder. And because of that, we have not been delivering airplanes to China recently.
And HSBC says a lack of certainty on tariffs and rates are weighing heavily on the minds of investors. The bank's U.S. and America CEO, Michael Roberts, tells us exclusively how they plan to navigate an unpredictable environment.
Clearly, we're in a period of rising tariffs, rising quotas. Don't know what the Chinese response will be to the latest tariffs put on by the U.S. But, you know, trade liberalism is certainly in a different phase than it was in the past. So I think we have to accept that. Our companies have to accept that. So a couple of responses. One, we're there to provide that advice. We're the largest trade bank in the world. We have abilities to really help companies manage their trade wherever they may be. So if a client is exporting from China, as an example, and wants to move that production capacity outside of China, we can help them. We're the largest foreign bank in India. We're a significant bank in Vietnam, a very big bank in Mexico. So we're really there to help them navigate through this unpredictability. I think that will continue. Regardless of what happens in the elections, we will have more tariffs, more quotas, a less easy trade environment to navigate going forward.
If I said to you, what's the biggest lever for the business in the near term?
Yeah.
Is it going to be rate cuts from the Fed or a clarity in politics and tariffs?
I think it's both. I think you need predictability. Companies need predictability to make their investments. Investors need predictability. What we haven't had really is that predictability. Lots of discussion on interest rates, lots of discussion of when and by how much. Now you've got the quota uncertainties. I think policy needs to be predictable. So if there's a rate cut, fine. If there's not, then it's the question of how companies then react to that. How do they then build their businesses to exist in a rate environment which is higher than it has been the last 15 years, but I would argue that the last 15 years have been an abnormal rate environment. So if they have that predictability, they can adjust their own production, they can adjust how they run their companies, and I think they'll do much better, but they need policy predictability.
But herein lies the point for the commercial bank. Let's just square that away, which is many people say to me they've refinanced a great deal, have refinanced on the retail private side.
Yeah.
Do you think that's the same for corporates? Are they holding back on doing deals, doing M&A, doing debt capital markets as a result of uncertainty? Yeah,
I think they were in the past. I think last year was certainly a reflection of that uncertainty.
And we've jumped over that now.
We have jumped over it. If you look today, the capital markets are on fire. We've had $750 billion of issuance in the debt capital markets for investment grade. Spreads are the tightest they've been in a long, long time. A lot of CLO formation of capital for the non-investment grade market, which I think will continue. And even the equity market, we've seen a lot more IPOs, led by the tech sector, of course, but IPOs are trading very nicely now. A lot more activity. So I think that sense of predictability is coming back.
Michael Roberts there, the CEO of HSBC US and Americas, with, of course, our very own Manus Cranney. Just very quickly here, so Alibaba has now given us something to talk about slightly, 60 minutes into the session here. So amidst this broader weakness across these equity markets, Bob is actually going the opposite way. In fact, just a few seconds back, hit a session high. Up 1%. That's one part to the story. The other one is this convertible bond story, which, by the way, I should also mention, I think JD.com also issued theirs. In any case, BABA pricing now that $4.5 billion convertible. So we're looking at a coupon of 0.5%. It matures in 2031 and is expected to close, in terms of the offering here, subject to your usual closing conditions, is expected to close in 5 days from now. So the company intends to use the proceeds here to repurchase, get this, repurchase shares.
And that's why the stock's up. I mean, it's interesting just how much that we've seen this sort of theme emerge among some of these China tech plays. But Alibaba specifically, though, right? The firm has basically approved the expansion of its share buyback program earlier this year. So they're adding $25 billion in stock repurchases already. That's one of the largest ever that we've seen in China. It looks like this bond offering is going to be keeping that theme stronger and going.
And also, I should also mention the corporate use in Alibaba. So yesterday, so you know how this week we talked about how them slashing their pricing for cloud.
Yes.
So the company announced also, I think this was yesterday, so they're planning to launch the cloud business in Mexico.
Yeah.
And further expanding across the region here. So we're looking at least 6 data centers in total. Malaysia, Thailand, Singapore, Philippines, and South Korea. That's over the course of the next 3 years.
Yeah, so looking abroad right now. All right, we got plenty more ahead. Check out these markets. Yeah, we're still seeing the Hang Seng pairing up some of the losses here, but we'll continue to give you an update coming up. This is Bloomberg.
Right, welcome back here. More on the Segantii story here. So these redemptions, we now have a number, in fact, here based on the sourcing and our reporting here from our colleagues at Bloomberg News here. So we understand that requests, not so much, of course, the money that was actually taken out, hit $1 billion before the move to actually shut. So as of, well, nearly $1 billion of requests before the decision to shut on Thursday. That's according to what we understand from people familiar with the matter, and certainly underscoring the lack of confidence, really, given the news flow here with the company.
And the fund's rules, well, we've seen before, usually allow only monthly or quarterly redemptions before these withdrawals were suspended on Thursday. We're hearing that some of Segantii's largest investors had already indicated plans to pull their money. So certainly this is something that we're hearing, getting a number behind it here. But yes, this is on the back of what we heard that they're going to be winding down. What this means for the hedge fund is certainly is a lot of questions. I think that the FT had an interesting report about whether, possibly would they actually move this hedge fund to maybe more of a family office of some sort, where it's something that doesn't deal with external funds, but maybe just Sadler's funds. But certainly the uncertainty still is something that we're kind of a lot of question marks about what's next.
Yeah, literally, it's now up to the courts.
Yeah.
Right, so we're there. So more on this later on, of course, in the show. Right, now as we wrap up also a week where it's been a fairly eventful as far as, I guess, this rally is concerned in Hong Kong, the lack of it, really. So after, 8 straight weeks of outperforming just about every single index out there globally, we're now poised to underperform MSCI. It was going to come. You did see some signs of overheating in some of these benchmarks. You had certainly that Nvidia report, which I guess in some ways fuels and maybe perhaps rotation back into laggards as well. So after 8 straight weeks, we're now underperforming the global benchmark. It takes us into the other story we were talking about earlier on the earnings story, while good, perhaps was not good enough to keep investors here. And we're still waiting for, I guess, the more policy pronouncements along the likes of property, which I think the guest earlier on said was a big deal last week.
At least we're seeing less of the downward revisions in China. So maybe we're hitting a turning point. On the fundamental side of things, but tech certainly has been that outperformer. Charlotte was talking about property materials is still that drag when it comes to those earnings projections here right now. But I thought it was a very interesting note from Gina Martin-Adams from our Bloomberg Intelligence team, along with Marvin Shen, talking about the impact of really the likes of Nvidia, right, and on global markets. Maybe that sort of impact is fading a little bit because you have this reemergence of these Tech 8 coming out in China now, too.
Which is a good thing. It was brought up by our guest earlier on, Sean Taylor, that the fact that we've been talking about this, the fact that markets have been doing well despite the Fed not willing to cut rates just yet. And you look at the reasons why that's so in Asia. So you have the AI theme in South Korea and Taiwan. You have India earnings coming through. You have a broadening out of the rally beyond Nvidia, which might just add, I guess, in many ways bring down vol, for example, globally, and really make it a good year to be long only invest in equity markets. Not so much bonds. We'll talk more about bonds in a moment with JPMorgan. But yeah, just a brief look at markets. at this point.
Yeah, you take a look at when it comes to the tech space, and we're focusing on that here today. I mean, Alibaba, we talked about that convertible bond sale, so that certainly has helped lifting the stock here because they're using those proceeds to buy back more stock potentially, according to that statement. But you're still seeing a pretty mixed sort of reaction to the tech space. Xiaomi, despite what we saw with, hiking their targets for EV deliveries and the like, the stock is still down some 2%. Perhaps we're down to some profit taking, some consolidation, as we mentioned. NetEase is up some 3% on the earnings as well. But there you go. Bilibili, that's the big standout there. We're down close to 10% losses there for that stock. Your broader benchmarks are looking like this here right now. So we're still seeing some declines, but maybe pairing off some of the initial sort of declines. But we're starting to see when it comes to what's really driving this, at least onshore is afloat. So we're up about 1/5 of 1%. Hang Seng is down about 1/2 of 1%. And there you go. HS Tech still seems to be that drag this morning. We talked about JPMorgan, asset management, talking about Asia credit staying pretty resilient and why they think the Fed can afford to stay higher for longer. Welcome back to the China Show. Here's a look at the HSI just half hour into the session. So we've pared back some of the initial sort of gains, I guess you could say, but we are still seeing a downside about 0.6 of 1% here today. It's interesting what, we talked about the end of the earnings season, so there's not really anything to really trade on. You talk about the dollar, I think it's firm for another 4 days, a fourth day. So really the EM sort of complex is volatile once again. And you talk about, the lack of catalyst really until we get to maybe, I guess, the plenum, Dave. That probably is something that we're watching out for as well.
Yeah, we did, and I have to emphasize this point, we did hear from Xinhua News yesterday on the Chinese president and sort of his marching orders, and he wants to see breakthroughs in employment, in the property market, which might give us a good indication of what they probably will sort of emphasize when we get to that plenum as well. So, but that's in July. So what, we have about 7 weeks of consolidation, if you will. We are coming off 8 weeks of outperformance globally. Welcome back to the show, by the way. So on Yvonne's point, right, this lack of capital, the stronger dollar. So dollar yen, we'll start with this. So inflation came in as expected earlier on. Reason why we're looking at this way, the level to watch is 157.52, and not that we're close to that, but the fact that that level is the level at which the first of 2 recent interventions are seen to have happened. So, right, so we're almost back to those levels, which underscores, and turn the page, please, if we can, on the strong dollar story, which has re-emerged of late. Fed officials pushing back in rates. You have good data coming through out of the U.S. For example, I think last night it was the PMI and, of course, the jobless rate coming through. And, dollar Asia is looking like this, right? The won is trading near 11400. Taiwan dollar's weakness. The baht, again, opened weaker today. What you don't see on your screens, I should just tell you, the peso, the Philippine peso, is beyond a point at which Yvonne was having a conversation with the central bank governor this time last week, above a level at which they probably will need to intervene. They're probably intervening right now. They'll probably send us an email to correct us.
He'll tell you.
Yeah, he'll tell us fairly directly. But they have had to come in, and this has been a re-emergent theme.
Yes,
that we've been
and
trying
they
to
said they're
about.
ready to if they have to, but they did. Not during the last decision, but before that, in small doses. That was according to the governor just about last week. But yes, so still that's one thing to watch here. Of course, this volatility we're seeing across Asia, FX here this morning in terms of what the rest of Asia is looking like here today. We talk about, basically global stocks have been a bit of a back foot here. And it's not just what we're seeing in Asia, but really globally as well. We saw in the U.S., barring the Nvidia was really the standout there because even the NASDAQ fell. But U.S. futures are still punching a bit higher. We talked about the dollar still gaining some strength here. And yeah, it looks like most equity markets are in the red here right now. Nikkei is where we're seeing most of that pain.
Yeah, while we wrap up this week, of course, just a recap of central bank conversations this week. Following quite a few surprises, right? So I think the UK inflation came in slightly stickier than expectations here. So when you look at, I think, where we are with interest rates itself, so elevated for now. Japan also, I think this week, the breaking news was the 10-year yield hitting 1%. Nominal yield. I think we have some graphics to show you this. Do we have that? Can we find it, please, if we can? So the schedule that we've been revisiting of when they'll cut interest rates has been pushed back and push back even further. I forgot about the RBNZ too.
Oh yeah.
Yeah.
That they were saying that they could be ready to hike.
They were considering it. What? Weren't you talking about a cut just 3 months ago?
So everything's been pushed back, right? Take a look at all the kind of major across DM at least. ECB, maybe we'll still see something in July. The BOE, though, that's been pushed back to November. We were thinking something pretty soon. And when it comes to the Fed, right, I think after what we heard from the U.S. PMI data yesterday, which continued to be strong, it went from being a November story to now a December story.
And then the minutes threw a wrench into that Powell press briefing where he said no, pushing back at the prospect of higher interest rates. And then the minutes show they did consider it, and some officials are open to the idea.
Yeah.
But yeah, what's this chart we're looking at here? Okay. This doesn't seem to be the chart. Anyway, okay. Well, but yeah, on New Zealand, this is also a point to make. Anyway, let's bring in Julio Callegari here, CIO of Asia Fixed Income at JPMorgan Asset Management. Good morning. It's nice to see you.
Good morning.
Amidst that promising backdrop that we've just outlined there for fixed income, how has the market remained resilient?
Yes.
Or not?
Well,
yeah,
it's definitely resilient on the high yield space.
Okay.
Right? I think what is true, though, is that the idea of high for longer is there because the data is resilient in US, and this is a challenge for the pure duration idea. So it's better just to have carry and nice yields while we wait until we have finally the rate cuts.
And where's the best place to find carry now?
We think that Asia high yield is a very nice place. Actually, it's the best asset class on the fixed income is the Asia high yield with close to 9% year-to-date return. It's true that this high figure is related to very idiosyncratic stories to some extent, like the very risky part. But even if you focus on the more safer part of the high yield, like the double Bs, you still get something like 5%. So it's a pretty decent return.
So when you say idiosyncratic, I'm guessing you mean some of the outperformance in China.
Yes, so the very, let's say, high return is related, let's say, to part of the Sri Lanka or Pakistan, and also the China real estate, which we think is very idiosyncratic. But I think even if you exclude that, there is still, a decent approach in which you go only for the safer part of the high yield, and then you have this nice carry while we wait.
And what do you think the next 3-month window looks like for this specific group?
I think it should be quite okay because as we were discussing and here, it's quite possible that we are not going to have any central bank cut over the next 3 months, except for the ECB, right? But it seems that particularly in Asia is a key challenge because the strong dollar is putting a pressure on the central banks across the board, and it's very unlikely that we are going to have rate cuts while you can afford to have decent returns on the high yield.
Yeah, it's interesting. We've seen a surge in kind of local currency corporate bond issuance this year, relatively speaking, compared to the U.S. dollar credit primary market. Is this a trend that's going to last, do you think? And is it a way to mitigate a little bit from this dollar strength?
Right. Well, it is a way in the sense that if you, in many places, you can buy the local currency corporate bond and hedge it back into dollars and have nice returns. So this is an approach in which you mitigate the currency risk because the dollar may well remain strong and you still have your carry.
Okay. You like casinos, Macau casino stocks. Simply I say that is because when you look at, say, the U.S. gaming credit space, for example, just compare and contrast it for us and why you think this part of the world's version of that offers the best value.
Right. So there is a bit of a premium on a relative basis, right? Yeah. And on top of that, we are confident that China will hold up well in terms of growth. So this combination of some premium and a benign view or benign outlook for growth, and the idea that we should be, focusing on carry. That's one of those are the key reasons why we like, Macau Casino, but also, India, renewables, and part of, the subordinated debt in let's say Korea or Australia. So there are interesting pockets in which you can get the carry in Asia.
Do you look into CGB space at all?
Yes.
Just given some of these ultra-long bond sales that have been just gone nuts this week.
Right.
A lot of it's retail driven.
Right.
But do you expect more of these sort of the institutional investors to really step into now and buy?
Yes, I think so. But honestly, we think that the CGBs will be in this sort of narrow range trading because for two reasons, right? If you think about the big rally, PBOC already said that they don't want to see a big rally from here, right? So it's very unlikely that we are going to see a big move. On the other hand, it would be really counterproductive to see a sell-off, right? And probably they would inject liquidity and manage that. So we think that is not like a great trade, in terms of a proposition for a capital gain on the CGBs. It's more, stability there.
Right. That seems like a PBOC call. You know how we had the Fed put? It's the PBOC call.
Yeah, like, watch out.
Well, speaking of anything across the region as far as sovereigns goes, that stands out to you?
Well, sovereigns, I mean, you have the two extremes here, in which the very idiosyncratic names and, Pakistan and Sri Lanka, for those that like that kind of risk, is still a good proposition. A good idea of having risk, but also the return. While on the, let's say, the IG part, right, the Indonesia or India, Philippines, we think that it's more a duration trade because the spreads are too tight. So, I mean, there are better ways, I would say, if you want to go in the IG space instead of using the sovereign Asia IG.
Right. And I forgot, we haven't even touched on just your broad thoughts on treasuries. Everything is priced based on treasuries as well. Just your thoughts on where we are as far as that range and yields go, nominal yields.
Right. Well, I think what we should say here is that even though it's likely that the Fed will ended up cutting rates, but it's hard to make the case that will be much more, or at least with today information, that will be much more than it's priced in, right? So that's why, if that's the scenario in which we're going to see a very gradual slowdown in activity, very gradual moderation in inflation, so that the Fed will also move very gradually. So that's is an environment in which, as we've seen this year or year to date, the carry is what will be providing, your alpha.
Until we start to see more steepening on that curve.
Yeah, but for that is probably you really need more information about the slowdown in U.S., something that we are not seeing very clearly yet. There is moderation, but not a very clear slowdown.
How about I know overall a lot of people have told us this, that it's not time, obviously, to your point, and steepeners, it's not also time to go up in terms of duration, right? But in terms of just the delta from week to week on adding duration, we've seen data that suggests people have been adding duration at the margin. Right. Are you guys doing the same thing, for example?
Not much.
Okay.
Because we think that basically what we could see here is more of this same, mixed data, and rates may be range trading here. So we don't feel the need to rush to add duration. We are much more, in the idea of having carry, and that's probably what will continue to work in the near term.
Right. How are you looking at, I guess as a final question, the biggest risks to your, in your universe? Is it inflation? Is it intervention on currencies, for example, that might ruin some of the carry return?
Right.
Is it something else?
Well, I think that some sort of reacceleration in U.S. with much higher than expected inflation is what would be bad for markets. And this is not, I would say that this is not only for duration. I think would be hard even for spreads to some extent, because if there is an idea that the Fed can hike again, and even for equities, I think would be bad. So it would be bad across the board.
We got a snippet of that.
We'll stop you there.
Yeah, okay. Cool.
Julio, it's great to have you. Julio Callegari there, CIO of Asia Fixed Income at JPMorgan Asset Management. Still ahead, China continues military drills around Taiwan. It's most expansive in over a year. We're going to get an update from Taipei next. This is Bloomberg.
Right. Happy Friday. Good morning. Good Friday morning from the Asia Pacific. If you're joining us out of the United States, thereabouts, there we go. So weakness across these equity markets. Why don't we talk about defense?
Yeah.
Let's try that.
There's something coming up this weekend. The Chinese Premier Li Qiang heads to Seoul for a summit with the leaders of Japan and South Korea, their first trilateral talks in about 5 years. For more, we're joined by our China correspondent, Min Lo. So what's on the agenda, and is it really going to be all about chips this time?
Yeah, chips is going to be a big part of those talks because it's coming at a time when China faces this wall of restrictions from the U.S., the Dutch, the Japanese as well. The U.S. is really picking off the suppliers one by one of China. And China, like Korea, it's the largest supplier of chips to China at the moment. Japan is the largest supplier of silicon wafers to China at the moment. And we know Washington has been courting Korea and Japan to really expand these restrictions of semiconductor equipment exports to China. And so a lot is at stake here. Premier Li will be using this trip to really shore up its supply chain security, but also big stakes for Korea and Japan as well, because they have these companies, SK Hynix, Samsung, with huge presence in China. They will be worried about retaliation. And time is of the essence as well. Washington is said to be pushing to reach an agreement on these curbs with Korea before June, before that G7 summit. And then after that, the Japanese and Korean leaders are said to be considering a trip to the U.S. to meet with President Joe Biden for another trilateral summit. So there's a lot of negotiations that's going on just ahead of those meetings.
Yeah, and a lot of other items in the agenda, which I imagine would include, would North Korea be part of the agenda, military ties, for example?
Yeah, for sure. South China Sea, East China Sea security issues will be on the agenda because, again, Korea, Japan, and the U.S., they have been strengthening this security mechanism. They've been holding drills in the East China Sea, where China has this disputed territorial claim with Japan over the Senkaku or Diaoyu Islands. Depending on who you speak to, they have different names for these islands. And then Taiwan as well in focus because Japan had sent their largest ever delegation to attend the inauguration ceremony of President Lai Ching-te on Monday. Beijing obviously angered by that. They had all those military drills yesterday. And then North Korea as well, the perennial issue with its nuclear missile program and that allegations of that weapons for aid exchange with Moscow that both Pyongyang and Moscow have denied. But again, Korea and Japan, they're going to push Beijing to use its leverage over Kim Jong-un to really rein Pyongyang in.
It's interesting, though, because it's been a while since these three nations have met. I believe COVID was certainly one factor, but certainly geopolitical tensions as well. And Korea seems to really want to express that this is a chance to restore these three-way talks. But you talked about the division and all these sort of issues. I mean, what's the chance of actually seeing a normalization of relations then?
Yeah, there is a lot of hope riding on this summit because they haven't met for 4 years and so much has changed in the last 4 years. We see Korea and Japan leaning closer towards the U.S. and there's this almost fundamental shift in the geopolitical dynamics here because if you look at trade, China remains the largest trading partner for Korea and Japan. But if you look at new investments, that's declined from both Korea and Japan in recent years. And exports as well, Korea's exports to the U.S. had overtaken its exports to China for the first time in over 20 years. So that's huge. There's a lot for Beijing to manage here. But the good news is there is some intention, it seems, from these three countries to stabilize relations because they look set to adopt a joint declaration still from the summit to detail some of these outcomes. We could look at perhaps increase in people-to-people exchanges, increased collaboration in science and tech, and in things like dealing with infectious diseases, climate change, perhaps efforts to bolster trade and investment as well.
Min, thank you so much. Min Lo, our China correspondent. And one of the things that Min just touched on there, in case you missed that, of course, were these military drills around Taiwan. So let's get more on that, of course, and let's bring in our Taipei Bureau Chief, Samson Ellis, is with us with the latest. Sam, thanks for joining us. So I think certainly this time yesterday was, the busiest point on the story. And then late, yes, I believe, the Taiwan's defense ministry held a press briefing. Just get us up to speed on what we know from this point yesterday.
Yeah, well, so we're just 4 days into the presidency of Lai Ching-te, and already he's besieged on multiple fronts, both at home and abroad. So it already kicked off yesterday morning when China announced a new round of military drills in the Taiwan Strait. But they didn't actually confine it to the Taiwan Strait. These drills are surrounding Taiwan completely in 5 locations, including in the Pacific off of Taiwan's east coast. And these really are reminiscent of drills China has held over the past couple of years. They're not quite as big as the drills we saw 2 years ago when Nancy Pelosi visited Taiwan, but they are around the same scale we saw last year when President Tsai Ing-wen met with then U.S. House Speaker Kevin McCarthy in the United States. So we have seen these before. And to put it into context, they're not, they are now encroaching fairly close to Taiwan, much closer than they have on a regular basis. They are around 24 nautical miles off of Taiwan, just outside what Taiwan considers its territorial waters. And I just want to highlight also a video released by Taiwan's Defense Ministry earlier today, showing just how close these ships are coming. In it, you can see a Taiwanese naval officer looking through binoculars at a Chinese PLA naval vessel just a few hundred meters away from them. And that really is a rare insight to just how close these navies are getting to each other. And as it just so happens, I was on a boat in the Taiwan Strait yesterday visiting an offshore wind farm that had newly been inaugurated. And there was absolutely no sign from what we could see of these drills at all. You know, they are happening quite a long way off of Taiwan shore for the most part. But it just goes to show that the fact that this, the visit I was on yesterday for this wind farm and with a bunch of investors who'd ploughed money into this wind farm, it just goes to show that it doesn't seem to be spooking investors too much as things stand.
Yeah, I mean, the equity market continues to be at records, Samson, which is a good point. But interestingly enough, it's not just the threat of China, but also something that Lai Ching-te is dealing with domestically. There's an opposition bill that I believe is going to be going to a vote here today. Tell us more about what could happen today.
Yeah, so we're down to what's likely the final day of this. The opposition, Kuomintang, is absolutely set on pushing through a new bill that would greatly expand the powers of the legislature. It would allow the legislature much more investigative powers. It would allow them to request documents from the government, from companies, from groups, from individuals. It would allow them to call in for questioning a whole range of officials, including the president, and it would mandate fines and punishments for anybody found to have disregarded the legislature or indeed lied to the legislature. So the government of Lai Ching-te and a large amount of protesters have vowed to try and fight this. The KMT likely has the votes in the legislature to be able to push it through today, so we're expecting to see that today. And then outside the legislature, we're seeing increasing protests, so we expect that to grow throughout the day and culminate in the evening. We don't know exactly how many people, but earlier this week we saw around 10,000 people in the streets outside the legislature calling for it to be withdrawn. So we'll have to see this evening exactly how it goes, how many people show up, and then to see exactly how the Lai government deals with this, whether they refuse to sign it into law, whether they challenge it in the Constitutional Court in Taiwan.
Samson, thank you. Samson, analyst there, our Taipei Bureau Chief, joining us with the latest there. We got plenty more ahead. This is Bloomberg. All right, checking markets here right now. Samsung Electronics, that one is seeing a bit drop here, about 2% in Seoul. This is according to what we're hearing. There's a Reuters report that basically talking about how the latest HBM chips have yet to pass Nvidia's tests due to heat and power consumption problems. Maybe that's why we're seeing that dip here this morning. We're also watching the China property space here as well, just given what we heard from Xinhua and President Xi Jinping really looking for some breakthroughs when it comes to the jobs front as well as the real estate sector. So far, though, these developers are lower this morning. Plenty more ahead. This is Bloomberg. Okay, it is getting to that lunch break in Tokyo, and yes, what you're seeing, still some downside when it comes to equity markets there. In fact, they are one of the laggards within the equity space in the region. The Nikkei is down about 1%. Topics, relatively speaking, do a little better, but still seeing some downside of 0.4%. But look at that dollar-yen trade. We are above 157 here right now, and we have also that JGB yield back above that 1% level. So despite what we heard from the CPI numbers, which did cool down for a little bit, that speculation that the BOJ is going to do something, still there in some ways.
Yeah, because I guess in some ways, the conversation is now, certainly the CPI story is still one of the sort of key features of their, their table.
Now it's about the currency,
isn't
it?
It's the currency.
Yeah.
Right? And, until they do something more, this currency is really going to play in this way. So 157.11, should this be the highest of the session so far? I'm going to try and look for the specific level wherein we actually hit that we're watching, because if we get close to that level, that might again sort of spark intervention talk. Not that we are headed into intervention, but the reason I say that is 157.52. To be more specific, is the level at which the first of the two recent interventions are seen to have happened, right? And by the way, right, so that seems like it's far away several weeks back. Data at the end of this month should actually tell us whether or not they actually intervened or not, right?
Oh, yeah.
Yeah, we were talking about the end of the month was when they would release that data. We're still a few days away.
Yeah. But I think,
we've been hanging.
If anything, we're really kind of starting to see, it's not really a question whether they intervene now. I think now it's a question in the market is how many times are they going to have to hike? You take a look at what Bloomberg data has been crunching, and they're basically saying if you have that JGB yield at 1%, I mean, markets are fully pricing in a 10 basis point hike at the July meeting now. So we could be seeing something as early as this summer.
Over the next 8 weeks, give or take. All right, the rest of Asia looking like this, though. So amidst the weakness in the dollar, really we can point to one culprit, which is the Bloomberg Dollar Index. There's some green there. And you really see what a strong dollar tends to do to these risk assets. Just about every single sector is down, or every single sector is down, to be more specific. Asia Dollar Index down about 1%. S&P futures are still pushing up after, of course, that weakness ex Nvidia. And we're down 0.9% on the regional benchmark. We are set for a weekly loss across global equity markets this week. Let's bring in Garfield Reynolds, who leads our markets live Asia coverage right now to talk us through this. Garfield, why don't we start off with just a strong dollar story, and why not talk about dollar yen? Is this a dollar yen story, or is this a dollar story?
Well, I think it's mostly a dollar story. That's been the issue in general for the Japanese authorities. They can't be all that comfortable to see the yen grinding higher towards the levels where everybody is assuming they intervened back late last month, beginning of this month. But there's not that much they can do about it. They haven't even been jawboning that much lately, because this is very much about the dollar, and it's very much about the Fed pivoting back towards hawkish hold kind of rhetoric. We've got Fed speaker after Fed speaker stressing the need for patience, stressing concern that inflation is going to take longer to bring under control than they thought. And all of that points to, we're going to go into the Fed meeting next month with everyone certain that they're going to hold rates and that they're going to shift the dot plot higher. And the question is going to be, do they leave 2 rate cuts on the table or only 1? And that's driving the dollar up against everything. It's just the yen is among the most vulnerable to that.
Yeah, I mean, and we've heard it not just from the Fed. I mean, the RBNZ this week, even the BOK in some ways, that everyone's hesitant to even talk about rate cuts right now. What does this mean for the Treasury? Where does it leave the Treasury market, right? I mean, obviously we've seen yields picking up once again. Have we seen a peak yet this year?
No, I can't say that we have seen a peak this year because, Goldman CEO the other day was talking about the potential the Fed doesn't cut it all this year. If the Fed doesn't cut it all this year and you're going into an election season where whoever wins the presidential election and whatever happens, with the two houses of Congress, you're likely to have increased spending going forward, so increased bond supply. You've also got what's going on with commodities where they're taking a bit of a break just now at the end of this week, but in general, they've been much higher. All of that argues for the potential that we haven't seen the peak. We may have seen it. There is the potential that at some stage, central bank rate hikes do start to bite, but for now, we're not seeing that.
Garfield Reynolds, thank you so much, who leads our markets live coverage across the region. More on this Japanese yen story, because this might actually be leading to, or the weak yen might be leading to, perhaps more onshoring of capacity back into Japan, right? So what you're looking at on your screens is dollar yen is yellow. The white line are expectations of where the exchange rate will be from Japanese corporates. It's based on a BOJ Tankan survey. And what that might actually mean is, again, this boosting of capital spending for some Japanese businesses. In fact, let's bring in our senior Asia stocks reporter, Hideyuki Sano, with this story for us from Tokyo. I mean, Sano-san, the yen, as we just showed, weakened so much. Expectations are also quite weak. Should investors expect companies to shift production back into Japan as a function of that?
Hi, David. Yeah, there's expectations in markets that Japanese companies might shift back their production back home. Now, I guess it's very easy to see the reason. The yen is very cheap at the moment. And if you look at the trade-weighted inflation-adjusted terms, the yen is at the lowest level since the currency went into free float, like 50 years ago. So it does make sense from the currency's perspective to build some factories here. And something I can point out today is that according to economists at Sony Financial, there's typically a lag of 3 years between the yen started weakening or strengthening, and from that point, companies started to change their behavior. So, for instance, in the past, basically, after the currency market trend has changed, it took 3 years for companies to change their behavior. And since the yen started weakening in 2021, it could be that this year might see the beginning of the change of the behaviors among Japanese companies.
So have we seen any sign of that? Any increase in capital spending in Japan lately?
Yeah, I mean, so far, the most moves we have seen have been limited to the semiconductor sector, and that's mainly supported by government subsidies as well as geopolitical concerns. And so we haven't seen any sort of widespread moves. That said, the machinery's orders data has shown that the March machinery orders data show that the orders picked up much more than expected, and so that could be a sign that the downtrend in machinery orders may be reversing. Now we know that it's a highly volatile data set, so we can't talk about the trend by just 1 month figure, of course, but that said, I mean, that is a positive sign that capital spending might be starting to pick up.
Thank you, Hideyuki Sano there, joining us with the latest on what this weak yen really means when it comes to this whole reshoring trend. We got plenty more ahead. This is Bloomberg. That stronger dollar, that continues here for another day. Take a look at what we've been seeing across Asia FX. We continue to see 157 levels for dollar yen. Yes, across some of these DM currencies, you're still seeing weakness in the Aussie dollar, for example. But really, it's EM FX that we really need to check here today when you see the renminbi still hovering on that 725, 726 handle. But we certainly have seen some weakness when it comes to the won, the Thai baht, the ringgit here this morning, too, Dave.
Yeah, well, I guess this really, in many ways underscores the pain we're seeing in Hong Kong equity markets today as well,
Yeah.
this dollar story. Speaking of Hong Kong, big news over the last, 12 hours or so here in the city amongst the financial community. Of course, Bloomberg has learned a story that Segantii Capital Management, the hedge fund, faced nearly $1 billion of withdrawal requests before the decision to shut down. Let's bring in our deals reporter, Manuel Baigori, to just get us up to speed and let's just go through the basics of what we know at this point.
Yeah, David, I mean, it's an evolving story, huge story with a lot of impact here in Hong Kong and even globally. I mean, it's a relatively well-known hedge fund, notoriously well-known for carrying out complex block trades, and they were managing around $5 billion in assets. I mean, as our scoop says, I mean, $1 billion in redemptions. I mean, that's a huge number. I mean, the scandal, hitting the fund is pretty severe, and they just announced as well that they are winding down the operation. So now the question is how they return that capital to investors in an orderly manner. But yeah, I mean, it highlights kind of like the severe impact in confidence, right? When this insider trading, scandals hit a firm like Segantii, definitely has a big impact. I can tell you that the community, is talking non-stop about this topic here in Hong Kong and the impact it may have on other firms as well.
Is it likely to have any sort of impact? I mean, what's next, really?
I think, yeah, Yvonne. I mean, that's a good point. I mean, I think for the banks as well. I mean, because this hedge fund had a handful of banks that was working very closely with them, so they will have to find other brokers when it comes to carrying out these block trades. They need to execute whenever a company needs to carry out a block trade. They need to be able to sell that in the market real quick, and I think that was one of Segantii's strength, and that's why banks really liked working with them, because they were able to pull off these complex deals in a very timely fashion. So I guess the question is now, how banks are going to adapt to finding the right broker for these upcoming deals in the future as well.
Manuel, thank you, Manuel Baigori there, our deals reporter with the latest when it comes to Segantii. Some other stories that we're following today. The U.S. Commodity Futures Trading Commission is ordering JPMorgan to pay $200 million for supervision failures. The regulator says the bank failed to properly monitor billions of client orders between 2014 and 2021. In March, JPMorgan was fined $348 million by the Office of the Comptroller of the Currency and the Federal Reserve over similar gaps. Boeing shares slipped after it scrapped a plan to generate cash again this year and warned of another significant outflow in the current quarter. Boeing says cash burn will be similar or worse than the period prior when it ran through almost $4 billion. Boeing's delivery woes have been compounded by China's request for additional certification on some aircraft parts. Tesla CEO Elon Musk won't say if he's still committed to a low-cost EV. He was pressed on the issue during a tech conference in Paris, initially telling one reporter that it was, quote, difficult to answer such questions. Musk later said he didn't think the subject would be of interest to the audience. He also says he doesn't want either tariffs or tax incentives for EVs.
Yeah, okay, if that's not interesting, maybe this next Lenovo story might just pique your interest here. Shares were up 44% from the lows. We're down slightly today. You had an earnings story there, and that's really despite the fact that the PC maker actually gave earnings guidance that Citigroup actually describes as weaker than expected. Now, earlier on, the company's CFO also told us how he sees their new AI PCs performing.
On the initial market feedback, I think that was a well-received product. I think because I think our AI PC obviously have features that actually meet the requirement of the customers. As I said, we announced our AI PC a few weeks ago. I think the initial response from the market is very positive, and we begin to start shipping out, I think, later this month, or probably, I think, in a matter of weeks.
So what do you think is most appealing? And again, how many more iterations of these products will we be able to see?
Yeah, I think using our own definition, because at the moment, AI PC, I think different companies using different definition. I think we actually use a very tight definition. I think have certain features that we consider AI PC. I think for Lenovo, we expect that we will obviously have a whole portfolio of products, but initial shipment in the current fiscal year probably will be in single digit, and then we'll grow into double digit. I think up to IDC at the moment expecting that the market will probably have about 50-60%. I think in 2-3 years time, we believe that is probably we will definitely follow that trend.
So the electronics industry has largely bounced back. Do you think this is a new trend? Do you think it's bottomed out, that things will get better for electronics in general?
Well, definitely from a PC perspective, we are very confident, or we have very strong evidence. I think that AI, or the application of AI, I think is going to have a major impact, I think, in the PC industry. Now, we actually saw, and the other evidence that we see that when you call bounce back is when you look at our result. We look at our own results. We have a very challenging first half of the 23-24, and we begin to see the rebound in the third quarter, where the group actually reported, I think, growth in revenue. This quarter four, we actually see all our three business group. I think the device group, the enterprise group, as well as the services, they've all been actually growing through year. Now, looking at, I think, the order book, I think talking to customers, I think we are very confident that this trend will continue.
That was the chief financial officer there of Lenovo just after they released their earnings and guidance ahead, speaking with our Francine Lacqua. Right, just some of the other corporate stories that we're tracking at this point. Alibaba, the big story too here, raising $4.5 billion from a convertible bond sale in one of the largest such offerings, in fact, in recent years. Now, sources say the company priced its 7-year notes that's due in 2031 with a coupon here of, what, 0.5%. The offering is expected to close in about 5 days or so. Now, Alibaba plans to use the proceeds to then buy back some stock. Now, Alibaba also says that it is planning, on a separate note here on the company, planning to launch its first cloud services in Mexico. It's looking to establish at least 6 data centers in key markets in the Asia Pacific separately, including Malaysia, Thailand, Philippines, South Korea, over the next 3 years. Baba's AI development platform Model Studio will soon be available in Singapore. Right, that's a wrap of those stories for now. Plenty more ahead here in shows. This is The China Show.
Here's your China Brief, a look at what's making headlines in national newspapers this morning. And state media are focused on China's 2-day military drills around Taiwan, which started on Thursday. A Xinhua commentary says that such exercises are necessary because any acts of Taiwanese independence cannot be tolerated. And the editorial also criticizes the island's new leader, Lai Ching-te, and says his actions push the territory closer to the brink of war. And over at the Global Times, running this cartoon showing a rickety boat titled Taiwan Independence, and it's actually heading, there you go, to the edge of a waterfall. This editorial says that basically any separatist attempts will face a strong counterattack, and accusing President Lai of inciting anti-China sentiment. The fact that this is happening, these military drills, just days after he became president, is in some ways quite telling of just the risks that are really, what we could see here, because it's not really so much that we're getting closer to conflict as what maybe state media might allude to, but really some sort of miscalculation or escalation is something that we could be seeing there.
You're right. It's probably a preview of what is likely going to be a recurring issue during this term, right? And I guess in many ways it draws a line, and I'm just being the pessimist, it draws a line to how good things can get.
Yeah.
And of course, not to also mention that Laiching is also going through, and today, of course, there's that bill in Taiwan that's a domestic story that, of course, the first few days has been anything but smooth sailing for him as well. And it goes into, I think, a couple of things, right? You have the trilat coming up for the three countries, and then the Shangri-La dialogue coming up next week, too.
Yeah, so it's interesting, too, when you compare our very own Jennifer Welch from Bloomberg Intelligence.
Yeah.
She talks about this speech that we heard in his inaugural day, of which had much harsher sort of criticisms of Beijing than perhaps his predecessor, Tsai Ing-wen. And maybe that's how you are seeing such a strong response from China right now. Meanwhile, we're talking about another report here. Xinhua talking about President Xi wanting deeper reforms for some of the country's key sectors, including housing. That's a key word there, and as well as job reforms. And he says they're in need of breakthroughs and changes aimed at improving people's livelihoods. The report offers clues as to potential focus areas. Yeah, maybe it's a sign, Dave, that we could be hearing something at the plenum in July.
Which is about eight or so weeks from now, which I guess gives enough time to work out the details, if indeed this is what his marching orders are for his, for the different departments going into that as well, right? So, and this really comes in the back of, we're waiting for more forceful measures. The one this time last week on property actually was, I guess in many ways, smaller amount than what was needed to buy up all that inventory.
Yeah.
But a lot of people consider that announcement itself just the turning of the page and something more forceful from the central government.
That it has a little bit more punch now than what we've seen previously. And in fact, a lot of those measures came out when I believe when the president wasn't even in China. He was actually abroad. So the fact that we're hearing this from Xinhua does suggest that maybe it is coming from the top right now. You take a look at how markets are doing here, and we talk about how things are looking, and it's looking like things are looking like, that's a lot of looks.
Yeah.
We're
don't look if you're
lower, but we're off some of the lows. There you go. We're losing our words as we get closer to Friday. But yes, so it seems like things are picking up in terms of the sell-off here across Hong Kong. We're certainly seeing that when it comes to the tech space in particular. You look at the things like Bilibili, these were all that came out with earnings. Despite some of them actually coming out doing better than expected, you're seeing quite a sizable reaction negatively to the stock. It does show that this rally, maybe it does have some, maybe not much legs left, right? That maybe people are just starting to take profits now after we're seeing these results.
And some of these are, some of these were the big winners during the rally, right? So I think property is a very good example of, some of these stocks are up 100% from the lows, right? So you do understand why there is this temptation to sort of take money off the table. Just given also the confluence of factors out there, dollar strength, you have this Fed conversation with rates remaining higher for longer. We're seeing bonds also pulling back, which is exactly what you're about to see when you look at this cross-asset going into midday in the Asia-Pacific this Friday. Futures are pointing slightly higher in the U.S. We're steady on European futures going into the open there. But as you can see, it's, generally speaking, a day when people are taking risk off the table as we wrap up this trading week. Right, that's it from us here on the China Show. We'll see you all on Monday. Bloomberg Markets is next. This is Bloomberg.